Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. We just were up in Vancouver, BC for the International Cannabis Business Conference, or ICBC, where they had some really good panels, including cannabis mergers and acquisitions. So sit back, relax, and enjoy.
First, how do you look at, based on how that company is structured and where they are, how does that affect sort of your view of them?
Structure, from my perspective, is looking at management and what kind of control does management have and how much that management group has invested, and then outside shareholders is key for longevity. I think those are probably the two most important. I don't know that issued and outstanding really is that relevant, but that's my take.
Structure, interesting. I'm an investor without a fund this time, so it's just my own money. So I tend to look very carefully at management, and I tend to usually want to work closely with that management on expanding their opportunities. Sometimes it's helping raise some more capital. More often now it's cross-pollinating. But I've just hit a little interesting thing that I'm going to speak about, even though it's quite private. I've been invited on the board of a public company, so some of the companies that I've invested in, I brought to management, and we're negotiating very tightly for some of those companies. So when we talk about structure, I don't have a deal structure to bring these investments to the company, and I'm now thinking and wondering, and I'd love any counsel from any of you, is what do I charge for my services, since I haven't gone on the board yet, and I'm acting, in fact, as an investor broker to bring a company, a whole company, into the mix of a public company. So I'd love counsel on that. I don't have an answer this week.
Jamie?
So Bhang went public through an RTO on the CSC in July. Before that, obviously, we were a privately held company, and I think our pre-public life was very much developing our strategic plan. Once we went through that going public process, which was very painful, and if any of you are planning to do that, please come talk to me. But seriously, I learned a lot from that process, and it took a lot of people, a lot of lawyers, and a lot of paperwork that, in retrospect, caused us to put a strategic plan together that's very focused. And now our M&A look is focused on where are those margin and revenue accretive opportunities where the fit is perfect for what we need to grow bigger. So we're not only looking to grow our top line and our bottom line revenue, and we're looking to grow our distribution reach, and we're looking to grow our brand recognition reach, and we're looking for companies that aren't looking for somebody. I get a lot of this. I have this great idea. And basically what they're saying is, I developed a great product, I need money, and I need you to run my business for me because I have a great idea in cannabis, but I don't know how to run a business, I don't know how to do marketing, I don't know how to get distribution, and they basically want to bring me their great idea and help me make them successful. We're looking for the same thing. We're looking for companies that have a value add for Bhang that fills some of the gaps that we have, so that these acquisitions are strategic and fit well with what Bhang has going on. We've been a CPG company since day one. We have been putting consumer packaged goods in the hands of consumers around the world for 10 years. So we're very clear about what we need and what lanes we're going into. We just acquired a beverage company called Red Ace Organics. If any of you read that press release, we're excited about that because it's professional athletes, it's Olympic athletes that are using these products because they are, the new buzzword is aptogenetic functional beverages. Red Ace has been selling these products in the large chain distribution centers like Whole Foods, Sprouts, Amazon for years, and has this massive following of athletes that are using these products because they work. So we saw that as an accretive acquisition for Bhang because it fit some holes that we had in our distribution plan. And so that's what we're looking for. Prior to going public, we just looked at every deal as we were kind of figuring out who we wanted to be. Now we're clear about who we are, and we're going after it.
So I guess just to clarify, and then we'll take it out to Paul, and actually maybe back to Patrick after that. But I'm talking about, do you as a public entity look at pubcos or private companies more favorably when you're looking at M&A activity? So does that actually impact your decision making?
Yeah, I mean, depending on the willingness of management in a private company to engage with you.
Mm-hmm.
So, but I think effectively, yeah, you'd want to target something private.
You do?
Yeah.
Jamie?
I'm a big believer that you just look for the win-win opportunity, and where there's a meeting of minds, where you've got management that's really in sync with goals and aligned with, I think, the philosophy. We're not looking for a money grab, and we're not out there just trying to gain top-line revenue. We're out there really looking for, like I said, those accretive acquisitions that make sense for us, and if they're private or they're public, I'm gonna take a look at them.
You're
Are you doing
respective.
deals for stock or cash or both?
Every deal is just like in real estate, you know? Every deal is its own animal, and you gotta figure out what works for both people.
So what I'm hearing is essentially it's irrespective of the wraparound. It's about what they're doing and the team. So Paul, do you
Be
agree?
clear though, a publicly traded company merging or acquiring another publicly traded company or investing in, or that gets very complicated.
Yeah. Paul, you want to chime in?
I was just going to say, you know, for structure, we always say that, you know, there's a lot of froth out in the market today. If you look at, you know, valuation or market cap versus of a publicly traded company versus a private, there's not a lot of fundamentals that make sense right now. There's a company with a $900 million market cap that did $20,000 in cannabis revenue in the first 6 months of 2019, right? Won't mention the name, but you know, I think what we've seen in this industry is that there's a lot of companies that have been structured to be publicly traded companies that, you know, to fool retail investors. At the end of the day, this bubble is going to pop in the sense that a bubble is created when you can finance a company on storytelling. But the good thing is I think we're getting to a place where we're you know, having fundamentals to driving your business and being able to put out a product that consumers want at a price that you guys can make money at is something that is going to make sense. When we look at acquisitions, we look at privately, you know, private companies. We look at technology that's come out of the legacy market in BC. I think we've been very successful in working with operators and entrepreneurs that maybe have needed help to commercialize their technology. And I think this is the thing that we love about British Columbia, is that there's some great operators and some very experienced cannabis people in this province. So we're really having fun, and for us, we've been focused on intellectual property, so not just acquiring technology, but filing patents around us. And with the Altrias and the Consolidation brands of the world, we think that intellectual property really allows the small guys to force the bigger guys to play nice.
Agreed. Are you guys seeing right now? Are you guys seeing sort of a shift in focus with your companies, more for sort of profitability, engaging potential M&A targets by their EBITDA and not top line?
I think there's going to be really two, at least we've seen some acquisitions in the last 12 months, but going forward, I think that still many of the big five, for example, are overpriced, overvalued, and they're still going to need to fill in their balance sheet, backfill it with new assets that can support that valuation. I think that you're still going to, you know, see that happening. They're going to have to justify that, but yeah, I mean, everyone's skating towards revenue, and you know, with a limited market that Canada presents, you know, really the only choice, if you're capitalized and structured well, is to be looking at U.S. assets that are cash flowing. They're legitimate. Just look at you know, there were 2 acquisitions today, you know, big, so they're happening, but they're all U.S. assets right now, because that market is under-regulated relative to Canada, so it makes for a safe haven for capital. So you've seen you know, if anyone's here looking for money, I'm sure there are, in the Canadian market, there's just been a giant sucking sound, and it's the sound of money headed south. And that's where they want to be, because regulators are off our backs, and people can function much better relative to the Canadian markets.
Well, so under-regulated?
Relative to the Canadian market.
Still very regulated, but I think at the end of the day, look, it's the consumer market. It's a very mature consumer market, and there are companies making hundreds of millions of dollars off of, in actual revenue running their businesses.
Yeah, I mean,
that's
you
what
look
we
at
don't see here.
the California market is roughly the same population as Canada. There's 6,000 or 7,000 licensed entities in California now, and they do it quickly. We've got 200 or 300. Our retail, the numbers from retailing, it's we represent 13% of the population in Canada. Alberta, right across the border, they're I think 4%. They've got half the number of licensed retail outlets for the whole country, because the government is off, entrepreneurs' backs. So it's more successful, and there's more cannabis being sold in Alberta. Who would have thunk, right? But that's the relationship between efficiency, capital, and the markets, is where government is not intrusive. You see progress being made, and people being able to, create healthy, safe products, that don't have a lot of garbage packaging on, that people want.
So your question essentially, if to restate it, and correct me if I'm wrong, is putting it in Bhang's perspective, is Bhang making different decisions now because there's pressure for us to be looking for bottom line revenue, as opposed to doing these willy-nilly acquisitions looking for top line revenue?
Top line aesthetics.
I think from Bhang's perspective, we put together a really strong executive management team. We're all shareholders. So the duty that we have to shareholders is a duty we have to ourselves. We are all very interested in Bhang being very successful. So when you come at that question of, are we looking at bottom line revenue? Yes, we want to improve our COGS. We want to improve our top line revenue. We want it to filter down so that all of us are making more money. That isn't just because we have a responsibility at the end of the day to there's a lot of people trying to do these quick turn investments, and there's a big short game when you are in a small cap stock that you're watching, because you make this great announcement, your stock goes up, and then people sell, and because you don't have that much volume trading, that one sale can affect your stock price. It's a very tenuous game that we're in, but we just keep saying, I tell everybody that works for me, don't look at the stock price, make good decisions, because at the end of the day, if you're running a good business and you're making good decisions, the stock market becomes a weighing machine, as opposed to that short-term market has spoken. And I want our company to be heavy at the end. I want us to be the biggest, baddest company we can be. But that's Bhang's perspective, and I know it's unusual. But to answer your question, out in the marketplace, yes, I'm seeing a shift. I'm seeing these big companies and the smaller, mid-cap stock companies are no longer just playing an M&A game. They're not gaming it anymore. We're starting to see a push for bottom line revenue, which I think will benefit the industry, all the way through.
It's a sign of maturity.
I think we're at another stage also. We went through a big investment cycle, and we sort of set the standards in the industry. What I'm seeing now is my investments are maturing. There are opportunities for them to grow and partner with others or whatever. But now I'm starting to look at the Israeli scene. I'm investing in a number of laboratories. I have a honey product that will take a long time, but will come to market. So I think that there's another shift that's going on. We saw the run-up of the Canadians of becoming public, the stock market. But now for the investor crowd like me, I think we want to see what's new and how do we integrate it in what we have and where we think the market is going. The market is absolutely going to be a consumer market, but we're also producing high quality, low cost products for 7 billion people in this world. And I think we as an industry have this responsibility to take care of everyone. not just the luxury market, not just the craft market. This is an international product.
One more, I think, point on that is that we're having conversations internally on the executive team that there are a lot of really good brands out there that are making excellent products that aren't going to make it. They're undercapitalized, or they're in a state where the moons aren't lining up for them. And so we're also watching those brands very closely, because we know that there are going to be opportunities for us to, come in and not contrary to what I said before, where I want to do M&A activity that's actually beneficial to Bhang, or plugs a hole or is a natural fit. But we're also looking to and seeing really smart people with really good brands that aren't going to make it, where we've got our eye on them too. And I think that's another shift in what's happening in the investment space.
Yes, and I think that in these investments that I'm making, it's sometimes not just the product, but it's the talent. The talent and the passion and their ability to pivot. So you bring in that IP to the company, to my company, and it can be utilized in other products and services.
Well, synergizing across all your entrepreneurs, absolutely. So let's take it out to sort of a different facet of how the industry is growing. Let's talk about different products and verticals that right now you guys see as sort of the fastest growing, the comers. What verticals, specific sectors in the space? I hear a lot about beverages. That's been obviously something that's been out there. Happy to start with Paul on this one. You have something for us, bud?
Yeah, for us, we've really looked at intellectual property as being an area that I think there's going to be a lot more focus on. In Canada, at least, it's all been about growing plants, because the 2.0 products haven't been legal. When we look at other industries, biotech, life sciences, pharma, intellectual property tends to play a big role in M&A activity, but also in shareholder value. And I think for us, we've said from day one, let's not reinvent the wheel. Let's go out there and acquire intellectual property from guys that have built it in an unregulated marketplace, and let's further develop it. Let's scale that with our engineers and file intellectual property around it. We see obviously these downstream formats that lead to more mass market appeal being what I think a lot of companies are going to be really focused on, whether that's through acquisition or developing those in-house. And even your example with the joint roller that you've licensed to Aurora, I think it's these new formats that maybe companies don't have that expertise or they don't have that technology in-house, so they're going to go to another market, whether it's the US or elsewhere, and look at licensing or acquiring it. And I think the new formats, at least in Canada, are going to really change, I think, how cannabis is consumed. But when you think about where cannabis needs to go today to where it needs to go, let's call it 10 years from now, is mass market appeal isn't going to be in the plant being smoked. It's going to be in all the non-smokables, the baby boomers and sort of today's non-consumers get comfortable with consuming through that method.
So I absolutely agree, and yes, Paul alluded to sort of our IP on the pre-roll side, and we actually use that IP as a form of non-dilutive financing when we licensed our tech and got an 8-figure sum back with the royalty from Aurora. So it's right now, I would very much agree, me being a bit tainted, but IP is something that I see as something that will differentiate beyond what right now is on the market, which are essentially a lot of commoditized solutions. Everyone's selling the same things. It's just how do you do it a little better? Jamie, your point?
We always quote this famous Henry Ford saying where he said, if okay, so we're saying in that regard, customers don't know what they want because they don't necessarily look at the environment and think what's possible. So our job is to see what's possible, and those low barrier to entry delivery systems are kind of a no-brainer. The European, American, Canadian consumer already alters their brain with beverage. They already use wine and beer and alcohol to relax. So we you know, I try to picture my mom out there with a dab rig and a blowtorch, and she's probably not going to be dabbing, and neither am I. Just so you know, I did it once with my dad. It was not good, and I'm not going to dab ever again. But beverages, I think.
Note to self.
Note to self.
And with that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.